Let's be honest here, ICT is not for everyone. And if you've been trading with ICT and you still haven't found consistency, then you don't have to blame yourself. Because let's be honest here, as I said before, ICT is not for everyone. It is a bit complicated, although I have tried my very best to make things simple, but it just doesn't work for a lot of people. And that is exactly why I'm going to make this video for you guys, okay? This strategy is just ridiculously simple, guys. Like even a 4 years old child can trade it, and it has such a good win rate. Like when I will show you examples later on in the video, you'll be shocked on how well this works. And you really don't need hard time frame analysis. All you need is one time frame, one pair, and that is it, guys. Literally, okay? Pretty much that's it. So what I ask from you in return is that if this strategy works for you, all you have to do is hit that like button and hit the subscribe button. If it doesn't work for you, then you don't have to do all of that. And you can maybe leave a negative comment, okay? But I promise you, it's gonna work for you if you watch this video till the end. Okay, so without wasting any more time, let's get on with the video. So the very first thing that you have to do is go over here to the trading view timing and make sure you set it to New York so your timings are aligned with me. Now, the next step is that you can basically go here, okay, forecasting and measurement tools, and choose fixed range volume profile. Now, just draw it out randomly on the chart like this, so you can copy my settings. So double click on this. So for the row size, we need it to be at 1000 and the value area volume at 70. Then go to style and enable the value area high, enable the value area low, and the point of control. And I have these settings red, red, orange, okay? And then you can decrease the opacity of these colors so it doesn't look cluttered, okay? Now, this right here, guys, this is a random volume profile, but this is not the strategy. I'm just going to explain you first what is volume profile, okay? And then I'm going to move on to the actual strategy. So when you draw out volume profile, you're going to see three lines. So we have this red line, which is called the value area high. Then we have the point of control with the orange line, and then we have the value area low. Now, everything within the value area high and value area low is called balance, okay? So this is balanced price action, balanced, okay? Anything that is above the value area high, in this case, is called imbalanced or abnormally, okay? And most of the time, if we see a failed auction setup, which I'm going to explain you later on in the video, we're going to see retracement back towards the value area low, okay? Over here, we have the value area low, price went down. And the point of control is where most of the volume was transacted. It is the peak of the entire volume profile. And price usually likes to consolidate around the POC because this is a fair value. So imagine that there is, like, let's say, an auction, right? And someone is selling a car. So this is, let's say, the highest price, okay, that the car went to. So for example, this is $200, right? So a lot of people are willing to buy that car for $200. This is a dumb example, but I hope you understand. Let's say $2 million, okay? A lot of people are willing to buy the car for $2 million. And anything that is within the value area high and value area low, it is acceptable, okay? So when price dips below the lowest price that the car was selling for example, let's say it was selling out for like 400K, okay? The people are not gonna sell their car, okay? And if price goes above the value area high, they're not gonna buy that car, okay? And they will push the price and they will wait for price to go lower. I hope that makes sense. So with that in mind, right, we have the value area high and we have the point of control and the value area low. 70% of the volume, 70% was transacted within the value area high and the value area low. Anything that is below the value area low is the lowest volume, and anything that is above the value area high is the lowest volume, okay? And people are not accepting prices below the value area low, and they're not accepting prices above the value area high. So you can see when we went up there, we took out the value area high, we pushed down towards the point of control. We consolidated, we pushed up a lot and then we just pushed back to the POC and also towards the value area low. So with this basic understanding, I'm going to teach you the entire strategy. Okay, so this is the strategy, guys. This is stupid simple and it works. Okay, so we're going to be using this trading strategy for gold. You can also use it for gold futures as well, but it works the best with gold. In my previous volume profile video, I gave you a different timing to plot your volume profile, but this is another timing, okay, and this is scalping one, and it works so well, guys. I promise you. So what you have to do first, guys, time frame is always going to be 5 minutes, not higher, not lower, always 5 minutes. You can trade gold, okay. So for gold, what you have to do for CFD, ZAO USD, you want to go here, fixed range volume profile, and you want to dry it out from 3 a.m. New York time till 7 a.m. New York time. Okay, that is the timing, guys. Now, let's actually go to, and this is the gold timing, right? From 3 till 7. Now, if you go to gold futures, right, it's going to be slightly different. And it's not a problem, but you'll see. So fixed range volume profile, again, 3 till 7. Okay, in this case, it's not different. But what I would suggest is that you stick to either the gold futures or ZAO USD. Don't just trade both at different times. For example, if you take one trade on ZAO USD, you shouldn't take another trade on gold. Okay, just stick to one. So what you want to do is, again, guys, just use it from 3 till 7. Now, once you have that set up, first thing first, we are looking for a failed auction setup. What is a failed auction setup, right? So let's say we have a value area high and a value area low. A failed auction setup is when price closes above the value area high in this case, and then immediately closes back below the value area high. That is what I call a failed auction setup. As I explained before, no one is going to buy when price is above the value area high. Well, that's the theory, okay? And price can basically just break out. And in my previous YouTube video, I also taught you how to trade breakouts, but this video specifically is going to be the failed auction setup. So when we see first, what we need to do is wait for price to close, not wick, above the value area high. And then we need to see a reclaim of the value area high. And pretty much that is going to be your entry. When price closes below the value area high, that is your entry. You're going to put your stop right above the high, and you're going to target the value area low or the point of control. The point of control is a key level as well, okay? So let's make this orange. And that's like that, okay. So point of control could be your lowest hanging fruit. Okay, you can take your entire profit if it's giving you at least 1 to 2 ratio to 1, or you can hold till the value area low. And similarly, guys, if we have price, first of all, closing below the value area low, okay, and then immediately going back up and closing above, you can take your entry. A long position, put your stop right below the low. If price has closed way far up, then you want to wait for price to retest the value area low level. You want to put your stop right below this low, and you want to target the value area high. Okay, so this is the entire strategy. So let me give you guys some examples. And this is today, by the way. It happens almost every day. You will be amazed by the results. And there one more rule, guys. So I forgot to teach you that. 1 second. Okay, I know a lot of people are going to leave this video because it's boring right now, but for the real ones who want to actually learn something, they will stick around till the end. Okay, so this is the timing, right? From 3 a.m. Okay, we plotted from 3 a.m. till 7 a.m. Now, this is price action after 7 a.m. on the 5 minute. If we are above the value area low and below the value area high, we need to see first price close below the value area low. Okay, so if after 7, right, if we were above the value area low, we need to see price close below the value area low first. Okay. And once we close, we are waiting for a reclaim and an entry, right? Reclaim and an entry. But there's a second scenario where before the 7 a.m. open, right, we are already below the value area low. So in this case, when after 7 a.m., right, all we really need to see is for price to reclaim the value area low, and then you can take your entry at the retest or take an aggressive entry, and then you can target the value area high, and vice versa around this area, okay? So this rule is very important. So let me go on to the example over here. So let's just try it out once again, fixed range volume profile from 3 till 7 a.m. Now look at here. This is 7, right? So we want to look at here. So at the moment, we are above the value area low, okay? So after 7, we need to see price. If this candle, this specific candle, was at 7.5 like this, then I would take a long. But it is still within the range, the time window that I've given you from 3 till 7. So we need to see first price close below the value area low. Okay, so let me mark this out like this. Okay, cool. So we close below the value area low first, and then we go back up and reclaim that level. This right here. So this is pretty much your long entry. You're going to put your stop right below the low, and then you can target at least 1 to 2 or target the value area high. This is your quick scalp, right? You can also go for 1 to 1.5 because if price goes above the value area high, then you ideally don't want to hold a trade because then you're just gambling, okay? And you're just letting the, luck go in your favor. So you can take 2 setups max per day, 1 in each direction. So you can take 1 long and 1 short. You cannot take 2 longs in a row, okay? Because the probability decreases. So this was a long position. Now look at this. We have a value area high up here. So what do we have here, guys? Price first closes above the value area high, and then we have failed auction. So we closed back below the value area low. Sorry, value area high. We closed back below the value area high. So this is going to be your short position. You're going to put your stop right above the high, and then you're going to target the value area low, okay? And you're going to go break even at the point of control level. Now, this is your entire trading, okay? You're not going to take any more trades, but just for the sake of this video, I'm going to show you examples that we had another failed auction setup. So this is the value area low. I've drawn it out with orange line. Let's make it red. Okay, cool. Now, look at here, guys. We've closed below it once again, and then we had a reclaim, okay? We have a reclaim, and we also have this auto block. So you can use ICT as well in some cases. So this could have been your entry, right? Or if you were waiting for a retest, then you would have missed out on an entry, but, And then price went back above the value area high once again. And then look at this, guys. We closed back again, and then we closed back below, and that is your another short position, guys. Literally the easiest trading strategy, and it has such a good win rate. Let me give you guys more examples. All right, guys, so here is another example. So fixed range volume profile from 3 a.m. till 7 a.m. And you can see over here, we were above the value area high, okay? So this right here, we are above. So we need to see a closure below the value area low first. Or price can just go up and close here, and then we can look for a short position. So let's mark out the value area low like this. So you can see we first close below the value area low, and then we have a reclaim above. So you can take your entry at the retest. You can put your stop below the bodies here. You can go for a quick 1 to 2 here. Right, target the value area high, and it just went up. And then again, guys, we closed above the value area high, and you can clearly see that we reclaimed, retest, right, and then we pushed down towards the, for example, if you closed here, it just went below the value area low. So in this case, we went back up, right, we closed, but we also like tested the point of control over here. So when you have like 2 setups like this, you don't want to take more trades because the probability decreases and price will not stay in one balance. It has to create a new balance to go up or down, okay? So that's the theory behind it. Let's move on to the next example. All right, guys, here is another example. Fixed range volume profile from 3 a.m. till 7 a.m. And you can see that at 7, we were above the value area high. Okay, that is step 1. We are already above the value area high. So all we really need to see is price closing below the value area high after 7. So this 705 candle, it closes below. So that is basically your short position. And you can put your stop right above the high, right, just to be on the safe side. And then you can target the value area low, giving you 1 to 4 risk to reward. And then we have the value area low down there. So you can see we first closed below it. And then we have a reclaim, and we went back up to the point of control. Okay, so in most cases, the second trade is not always going to go up above the value area high because we are already coming from the value area high and people are not accepting prices higher. So it's very unlikely that price will go back to the value area high again. So the second trade, you can target the point of control most of the time. And then you can see that at point of control, we consolidated because, as I said before, price tends to consolidate at the point of control level. Let's move on to the next example. All right, guys, here is another example. Fixed range volume profile from 3 a.m. till 7 a.m. And you can see that we are already below the value area low. Okay, so after 7, right, you can see that we closed above the value area high. Sorry, the value area low. We closed above the value area low. So you can put your stop right below the bodies. You can target the value area high, or go for 1 to 1.5. Take some risk and just hold till here. That is 1 to 1.5, and then you can see once again, guys, right? We closed above the value area high. That is step 1, and then we reclaim it, and that is your entry at the retest or at the close over here. Short position, stop right above the high, and then you can target the value area low, and this gives you 1 to 3 risk reward. Do you understand how powerful this strategy is? Okay, let's move on to the next example. All right, here's another example, fixed range volume profile from 3 a.m. till 7 a.m. And you can see that at 7, we are above the value area low. So we need to see price either close above the value area high first or the value area low. So we consolidate here around the point of control level, and then during New York session, we close below the value area low. And then we have a reclaim back up. So this could have been your long position, stops below the bodies of these candles, and you can go for 1 to 1.5 in this case, right? And then we have the value area high up here. So we close above it, and then we close back below. So at the retest, you could have taken this entry, put your stop right above the high, and you target the value area low, giving you 2.4 RR. All right, gang, here's another example and the final one. So fixed range volume profile from 3 a.m. till 7 a.m. So after 7, you can see that we are above the value area low in this case. So we didn't close here, so we need to close first. We just wicked. And right here, you can see we close, and then we have a reclaim close back up. So an entry on the retest or at the close if you want to be aggressive, right? It really depends on you if you want to wait for a retest. If you wait for a retest, you are going to miss out on some trades, but you'll get better risk reward. So there's no fixed way to deal with this. So value area high is up here, so you can potentially go for 1 to 1.5 over here, okay? And or if you want to be like really like aggressive, you could go for 1 to 2. But what I would do is I would go break even at 1 to 1.5 here, okay? And then we have the value area high up here. So what happens, guys? We close above it, then we close back below. That is failed auction setup. We take our entry at the retest, and we put our stop above the bodies here, and we go for at least 1 to 1.5. And that is it. Okay, simple, repeatable, mechanical. Follow for more, subscribe right now. I'll see you guys in the next one.